Hi everyone, I'm Hamza Khan, Associate Director at Grant Thornton, and I lead our private equity sponsor coverage efforts for the firm nationally. Welcome to our private equity series, In the Spotlight. Today we will be discussing a popular topic, the rise of minority investments, and are joined by three panelists from well-known mid-market private equity funds to discuss the topic in a bit more detail. In recent years, we've seen a popularity of minority investments and private equity firms raising dedicated funds for minority deals to meet demands in the market. And today we'll be finding out more about the rise of minority investments, what they mean, how can entrepreneurs benefit of unlocking value, de-risk, keep control, and continue to grow their businesses. Let's first start with introductions of our panelists. David, would you like to go first?
I'm David Ewing. I'm one of the managing partners at ECI. We're a mid-market private equity fund.
I'm Andrew Garside. I'm a long-standing partner at Living Bridge Equity Partners, focusing on new investments.
I am Mark Ciancimino. I'm one of the co-founders of Allseas Capital, which was established in 2019 with a specific focus on minority investments.
Good afternoon. My name is Mo Merali. I'm a partner here at Grant Thornton, and I lead our private equity group across the UK.
Andrew, we'll start with you first. Can you explain to us what a minority investment is and what drove Living Bridge to start doing minority deals?
As a group of partners, we started investing 25 years ago, initially solely in minorities. So we've got a very long heritage investing in minorities. Many of the success stories we're associated with are minority investments. Indeed, 60% of investments to date are minorities. We've actually gone a step further and launched something called True Minority, which is focusing specifically on smaller equity stakes of between 10 and 25%. Not many people focus on that size, and we think it's an important area to attract new people. So for me, a minority investment is one where the investor understands the concept of partnership and is respectful that you have a seat at the table, but you don't own the table. And you've got to influence through your experience, through what you bring to the board, through your data, through your insight, and through engendering really high quality debate. So it's more about attitude than the numbers and the rights, I think.
And Mark, you have a mandate to focus on minority investments. Can you tell us more about setting up a dedicated fund at Allseas Capital for minority deals?
Sure. So we established Allseas specifically to focus on this mandate because we felt that across Western Europe it was very underserved. But what we could see is that there were lots of entrepreneur and family-owned businesses who were looking for a partner, looking for a capital to help them on the next stage of the journey, but they believed very strongly in the potential of the next 5+ years, and they didn't want to give up control. A lot of entrepreneurs value autonomy very highly. And so our approach to it was to say, if we can come up with solutions that allow them to retain control, but give us very interesting risk return, we could kind of square the circle and give them what they're looking for and create great returns for our investors.
Thanks, Mark. And David, we hear over a third of ECI's investments are minority deals. Can you tell us what minority investment means to ECI?
I mean, we're a single product fund, so we only manage, we raise one fund in series, unlike a number of firms that have a kind of buyout product and a minority product alongside. We can do both types of transactions through the single vehicle. And as you said, about a third of the deals that we do are an economic minority in those deals. There is the legal construct that exists, and then there's the practical reality of what the day-to-day is like. And our sort of working in partnership with management teams, which is what we're all doing, is about how do we influence and listen and respect other people's views as to how we make things work best for all shareholders.
Why do you think there's been an increase in the popularity of minority deals, with more deals being done on this basis and more fund being set up with the aim of doing minorities?
There's a lot of capital in the private equity market, and where there's lots of supply, it creates innovation. And you have a lot of very experienced investors that are trying very hard to bring incremental investment opportunities to the market. And therefore, you just need to be more creative. You need to be able to do smaller deals, faster growing deals, larger deals, smaller equity stakes, bigger equity stakes. But basically, private equity is getting a bigger share over time of solving capital problems, and therefore you've got to be more flexible. And a big part of that is being able to deliver minorities.
I believe that we're at a really interesting point in the European market in this respect. I put a big part of it down to a kind of ongoing education process that firms like ourselves are trying to do. In the past, entrepreneurs and families would sort of think, well, I can do the traditional PE thing and sell, or maybe I, lever up my balance sheet and take a big dividend. And now they're looking as there are ways to, there are other alternative ways, maybe hybrid ways, or a spectrum of different solutions that can be used to achieve some of the same goals. And I also think that there's been a bit of a sea change amongst a lot of the entrepreneur community in sort of thinking, well, I don't particularly necessarily want that big payday now. I love my business. I see a lot I can do with it for the future. I see a lot of situations where people sell too soon and they could have created more value over time. But equally, they may have run out of, capital, on their own basis, or not be comfortable with the options available. And so I think minorities have come in as a solution to some of those requirements for business owners.
The minority deals that we encounter are almost invariably primary deals, so we're working with the founders in businesses, and we've got a number of examples of deals whereby the sort of situation was, for example, a business which was demonstrably successful in the UK, but the next stage of its growth was definitely going to be to internationalize. And the founders of that business, who were still involved in the management of it, were wholly inexperienced at running an international business. So their kind of appetite to kind of bet the farm on the next big thing was restricted. And so actually doing a deal with us allowed them to, if you like, kind of de-risk their personal balance sheets in a way that made sure that they were going to be kind of economically well off for the rest of their lives, and also bring on board a partner who had executed that type of plan a number of times before. So we had some proper experience to bring to the table there. So it's that there's different kind of ways as to why these deals get unlocked, and why the mix of kind of experienced entrepreneurs and private capital work well together.
One of the big differences is often these situations, or to a greater extent, these situations are cash in transactions. I mean, sometimes there's cash out as well, but a lot of times they are cash in. And so that, that differs typically from, a standard sort of LBO, where it's really just, the asset being passed from, from one group to another. But in terms of how the deals themselves are structured, I mean, one thing that, really characterizes it broadly from our point of view is they tend to be less levered in terms of how they're put together.
And actually, you've got to step back completely. Forget all the jargon, forget the instruments, forget all the structuring, and get to know people and focus down on the key objectives and the problems you are trying to solve for an entrepreneur. Get complete alignment around the plan, and only then do you start structuring around it, and try and keep things as simple as possible. There's a huge amount of complexity and alternatives of different instruments, but generally we try and keep things really simple and only as complex as you need to solve the problem for an entrepreneur.
We want to make sure that we're able to get out of the investments that we make after a due course period of time. And so really understanding the motivations of the founders or the management teams, the what is it we're trying to achieve over the next 3, 4, 5 years? What are the things that we need to do to get there, and what's going to happen at the end of that period of time? We, like probably all of us here, are managing, sort of 10-year money. So we need to make sure that we can get out and return that money to our investors. And so it's clear that as well as us understanding their position, they also need to understand how it works for us as well. So we can collect if the stars align, then deals takes place, and if they don't, they don't.
And we want to work with management teams who are going to be demanding of us, but recognise that this is a two-way partnership. And I think the key for that is, as you said, understanding objectives, get complete alignment, back people that share similar values. And then when you have bumps in the road, hopefully you're going to approach those challenges with the kind of same mindset and figure things out together. We had a very successful minority investment in a company that was a leader in a specialist niche of recruitment, but a specialist niche of technology recruitment. It was owned by two founders. They built an already successful business. It was making about 5 million profit, and let's say it was worth about 40 million pounds. And they were really considering the merits of either a full exit, which would have made them pretty wealthy, or pursuing ongoing international growth. And they couldn't quite decide. So we offered them a proposal which we refer to as like a replacement capital proposal, where the founders realise part of their value, but they stay in place, they stay in their roles, they carry on running the business, and they retain the majority of their equity. Completely hit the spot with them, and in some ways allowing them to realise some capital into their personal wealth away from the corporate wealth, just re-galvanise them to push for the next phase of growth. Business is already international, but we helped them grow a much bigger, dominant US business with our US experience. We also carved out 15% of the equity to offer incentives to build a new management team. And then we, at the right time, pursued an exit, and we attracted a US investor to buy the business for about 180 million pounds, which is like 4.5 times what the business was worth when we invested. So we had a super return, super journey with the team. Most importantly, the founders got an even better deal than we did.
It'd be really good to hear an example of a minority deal at ECI.
Yeah. First of all, this was one of the examples of these succession buyouts where we'd pre-agreed with the chief executive that after a couple of years he would with us source a successor to enable him to be able to leave as a shareholder and as a manager. That actually went better than expected on both of our points, I think. So after our sort of first we're a couple of years in now, let's go and speak to some headhunters and we'll start that process, and it might take a year to get the right person to join. So simultaneous with that first discussion, the most perfect candidate appeared on our radar, and within 4 weeks he joined us as chief executive. So that all happened a bit more rapidly than any of us were expecting. Over the piece, we did 6 acquisitions. Some of them were just building some scale in the core business, but also we built out the kind of product base of the business. So we had 3 new products within the 6 acquisitions that we did. And that really sort of transformed this business into like a proper platform rather than quite a niche provider. It was a fantastic financial return for us and indeed the founder, as well as, of course, as the management team that we hired in.
Thanks, David. Mark, I know you're a new fund and been going since 2019. Can you discuss one of your investments and how your investment has helped scale that business so far?
Sure. So our first investment is probably the best case study from our point of view. It's still early days in the life of the investment, but we're really happy with how it's progressing. It's an optician group in the UK, which is founder-owned, was established about 15 years ago, and the founder has been growing it by consolidating kind of independent opticians around the UK. And he was at a bit of a kind of crossroads. He'd had tons of inbounds from sort of traditional private equity buyers, but his attitude was, I didn't spend the last 15 years doing all this hard work to hand over the keys at this point. I know I need capital because, the buy and build continues apace. And if anything, we're going to need more and more as time goes on. But he also knew that he needed a partner so that he could do some of the stuff that he knew he had to get round to doing in terms of sort of institutionalizing the business a bit and moving from that kind of, that sort of founder stage to something a little bit more corporate. So he knew that he needed both of those things. And so we kind of had a dialogue with really what he was, what he was trying to achieve, what type of partner, and really what we presented to him was a situation where we made a structured investment in the company, and that was pretty attractive from his point of view because it allows him to capture a bit more of the upside, be a little bit less diluted than a pure equity investment. And equally, we get a nicely sort of downside protected investment in the business, and we really tried to come up with something very tailored for the situation. And it's been a very, very busy 2 years. We've helped them on kind of larger strategic M&A when that has come along, and helped them sort of reflect and the pros and cons of those situations and do a bit of the heavy lifting so that they can be efficient. Help them with quality of reporting and really sort of pull all those strands together so that at the next liquidity event, next stage of the journey, the business will be in a place that will appeal to the maximum range of buyers, whether that's PE, trade, or even public markets down the way. So it's really been a great journey to date, and with lots still to go from here.
So I'll refer to our initiative to build something we call True Minority. That's just making a specific feature out of desiring to invest for smaller equity stakes between 10 and 25%. We thought quite hard about what the legal rights should be attaching to those smaller equity stakes. And the whole purpose of that is to attract more entrepreneurs to think about doing a transaction with a private equity firm who wouldn't typically be attracted to maybe a larger equity stake.
But increasingly high level is doing acquisitions through the portfolio companies, and so the flexibility of us as an equity provider, and also importantly of the debt funds, in putting very substantial acquisition lines in place at completion that can be drawn upon very quickly. And with very little diligence requirements and stuff like that, has been quite an innovation within the market.
Often what we like to do are kind of more hybrid debt equity type of situations where you're providing different instruments. Some portion of the capital has more sort of debt-like characteristics and more of a contractual coupon, and then you have some equity participation alongside that, depending on what makes sense for the specific situation. And the appeal, frankly, for the entrepreneur of solutions like that can be potentially less dilutive.
So alongside, if you like, the kind of technical innovation that's taking place within the market, the overall understanding of entrepreneurs of kind of who we are and how we behave is going up and up all the time as well.
How do you see the market at the moment on minority deals?
I think the minority product, if I can call it, or a solution more importantly, is something that has always been there, but it is not as clearly understood or is clear, because it's very easy from a funding perspective or from an advisory perspective to try and just roll out that plain vanilla, this is what we understand, this is what it looks like. Actually, the minority, and it's not seen as a product, it has to be seen as a solution, because you've got to understand what the needs are across the piece. And actually, when the Business Growth Fund invented itself back in 2011, they felt that they had the need to re-educate a market that really did understand growth capital, for want of a better phrase, which is really where this solution should have, has its roots. But so that what you are doing is you're not displacing the shareholders, you're not replacing them, but actually you're augmenting them from the point of view of providing some capital, but even more importantly, providing the expertise and the professionalization of businesses. So the solution has always been there. It has ebbed and flowed depending on the demands of the market, the market dynamics as well, because there is a really important piece here around how competitive can the minority solution be seen. So I think certainly in the last the last recent period, well, I think what it has given is a really interesting option to entrepreneurs and to businesses to say, we do want to de-risk a bit, but actually we need to take the business to another level from a capital and expertise. So I think there's we've seen a lot more activity in that growth capital minority investment in the last 3 years, perhaps than that preceded it, because also of the different sources and different types of capital that people are prepared to deploy and how flexibly they're able to deploy that. So I think again it's created a class of its own, as if you like, because it really is being differentiated.
Thank you very much for your final thoughts.